So it's come to my attention that we need to talk about the simplicity of day trading because, especially today, I've been looking on social media and hopped on a few TikTok lives, and every single person is overcomplicating trading so damn much. And it was more so from the unprofitable people or the people that have never got a payout that I was seeing this from. Now, I didn't take a trade today. A lot of people didn't take trades today or they lost. And they said the reason behind them not taking a trade was they saw a good setup, but their discretion told them to not take this setup. Okay. I am an avid hater of discretion. Okay. And it's mostly because it just doesn't work for me. Every time I've tried to use discretion, I've messed up. Okay. I don't like entering a trade and thinking, well, someone else may not have taken that trade for this reason. Okay, I think a trading strategy and the trading setup should be mechanical. If this happens, you take the trade. If this doesn't happen, you don't take the trade. But I see so many people coming into the trading space for the first time and they learn a discretionary model. Discretion is not good for beginners whatsoever. You need to build that market experience over at least 3 years. Okay. So when people come into trading, they immediately think that they know better than a strategy and they know better than the market and they just know where the market wants to go. Give your head a wobble. It's just not the case. So why did I start trading mechanically in the first place? I think it's probably good that we start with that. So I started trading. I first learned TJR's model, as everyone did, and I slowly transitioned into using PB Blake and PB Patrick, PB Trading's strategy, which is all around using inverse fair value gaps, targeting 5-minute fair value gaps, blah, blah, blah. Okay. That model is called the mech model. It's called the mechanical model. And what I later found out down the line is that is just not true in the slightest, because I would take the exact setup. There'd be a checklist of here's what you want to see from a setup. I would check every single one of them boxes for a trade. I'd take the trade, I'd lose, I'd then go on social media and see Blake put on his story, oh, I didn't take this because of XYZ. And I thought to myself, hang on, if this strategy is meant to be fully mechanical, why didn't you take it when all the mechanical boxes were checked? I thought, okay, he's got loads of market experience, it's absolutely fine. So then I shifted over to other people. Cat Trading, one of the people that was on the PB Trading bootcamp. He's got a good few payouts. I joined his Discord. I was watching his live streams because he uses the exact same model. And he uses the same model, but him and Blake and Patrick were just not taking the same trades at all. And it hit me. I thought, this model isn't really that mechanical at all, because I found that it does happen multiple times within New York AM session. I'd maybe say on average, this model presents itself mechanically 3 times per New York AM session. Most of the time, if you trade it mechanically, you actually lose. So I'm not a massive fan of that. So I went on a mission to make my own mechanical model, because every time I tried to use discretion, I'd lose, and then someone would tell me, oh, you need to trade it this way instead. And it just kept stacking up. It kept adding more confluences. I then went into analysis paralysis, where I didn't want to take a trade because no matter what the conditions were, it could be the most A+ setup in the world. I could find a way to invalidate that trade and make me not take it. And that's what I saw a lot of people doing on TikTok Live. They'd see a trade and they'd say, oh, but I see this, and that's making me not want to take the trade. Okay, fair enough. But every single day they do the same thing where there's an A+ setup there and they say, oh, no, I can't take this because of this. And it's a different thing every single day. Now, it's good to have a lot of knowledge in trading. It's good. But a lot of these people, and maybe even you, have too much knowledge. You go onto the charts and you're using 10 different confluences, okay? If you look on the chart, you will see fair value gaps everywhere. You will see rejection blocks everywhere, order blocks everywhere, breaker blocks everywhere. So no matter what, there's never going to be an entry where there's no fair value gap, rejection block, order block, breaker block in your way. What you've got to do is create a strategy that uses one or two of them confluences. So instead of having, say, for example, 4 confluences that could get in your way, you've only got 2. Okay? As long as you backtest a mechanical strategy over 3 years worth of data and it is consistently profitable over a 60% win rate or a 60% return if you trade high IRR, that works and you should just follow that. My trading has become so much less stressful after switching to a purely mechanical model because for me, either I take the trade or I don't. And no matter what, it will follow this exact mechanical model. If it wins, I'm super happy. If it loses, it's just part of that winning statistic. So now I don't blow up on the charts because no matter what the outcome is, I've followed this mechanical strategy that I know is going to make me money in the long term. Whereas you don't know whether your discretion is going to make you money in the long term. Because with your discretion, it's based on your knowledge, but also your emotions. It's so much easier to be an emotional trader when you try to use discretion because you can see, for example, a 1 minute fair value gap in the way. And depending on your emotions, you will either look at that 1 minute fair value gap and say, oh, I don't like that, I'm not going to take the trade. Or you could have different emotions, which will make you say, actually, that's not really that relevant. I'm still going to take the trade anyway. So now your discretion is just based off of emotions at that point. And I get people say, yes, if you're confident in a trade, you should take it no matter what's in the way. Cool. But should you do that every time then? Do you know what I mean? If you're confident in certain aspects, you've got to have reasoning behind it, if you know what I mean. And then all in all, you just need a mechanical strategy. You need to stop thinking that you're better than a mechanical strategy. People frown on pattern trades. And do you know who frowns on pattern trades? Experienced traders. People that have actually built up the experience and credentials within the market to have discretion. They've seen 1,000 trading days go by. So they've seen a lot of scenarios within the market. You haven't. And say, for example, you've been trading for a year now. You've maybe seen 200 trading days. You've barely seen any of the scenarios that actually occur on the markets. So I reiterate, stop thinking that you're better than a strategy. Stop thinking that you're better than a fully mechanical strategy. If your goal is to make money in trading, get a mechanical strategy that is proven to be profitable and use it. Get your payouts. Maybe it might have a 65% win rate. It might have a 70% win rate. But you're seeing traders using discretion who have an 80%, 90% win rate. Guess what? You're still new to trading. You have made no money yet. So what do you need to do? Make money. This 80%, 90% win rate strategy that requires discretion is not for you. It's not tailored to you. You're not experienced enough. As a newbie, you should be following a mechanical trading strategy. And as I've said before, don't just go pick anyone from online. Pick them and backtest it for yourself. See if you can be profitable over a year, 2 years, 3 years with that strategy. And if you are, then use it in the live markets because everyone's looking for this next best strategy. But realistically, what you actually want is to stop blowing your money and start making it. Isn't that why we're here for trading anyway? If you think you're going to go from a $0 month to an 100k month because you finally mastered your 90% win rate discretion strategy. It's not going to happen. Build it slow. Make your first 2k month. Then when you get better, make your first 4k month and progress like that rather than trying to jump straight from a 0% win rate to a 90. Go from a 50% win rate to a 60% win rate, a 60% win rate to a 65, and keep going and keep building it just like that. Let's put it this way. If you gamble on the markets, you will have a 50% win rate. That is statistics. You either buy or you sell, and you're either right or you're wrong. You will have a 50% win rate if you gamble with a one-to-one risk reward. So all that you need to do is be slightly better than a gambler to make money. You just need to have some sort of idea within your trading to make you make money. So you don't need anything fancy. You just need to be better than 50%. You just need to win more than you lose. So pick a strategy that wins more than it loses and get on with it. Start making money. That's my rant over. Hopefully that made a lot of sense to you guys. That is just a full raw rant. And if you want any more, drop a like, subscribe, let me know what you want me to talk about, because I do like to yap about the trading space. I've seen too many people making too many mistakes that are holding them completely back. And well, I was there. I was trading discretionary and it wasn't working. Switched to mechanical, and I have had 2 losing days or 2 losing trades in June and July. Those are credentials after switching to a mechanical strategy. So yeah, follow my advice and I promise you it will work. Thank you and good night.